All right, let's get into it. Weekend review. Where we at? So it's just past quarter to four on where we at, the 17th of November. So look, let's as we normally do, sort of start off with DXY. Thing is still firmly in charge moving forward. Excuse me. Ever since, well, I mean, look, ever since that 50 base point cut, yeah, we all know that. But the more recent sort of price action has really been this whole election trade, which is really just this section here. So you can see, look, things are winding down a little bit through this period here. We had that sharp drop off. I know this is a bit of history, and we all sort of know it. History, 1 month history, 3 weeks history, whatever. But look, it was starting to move down prior to the election here. This big drop down here was like that sort of iffy, turns out maybe Carmella and it's very tight and all this. We know this is all farce and, it turned out to be basically bullshit for lack of a better word of it all. And then obviously dribbled down a little bit further, don't really worry about too much in that. And then from election start of the day, bang, moved up here. So this particular chart doesn't show this as a gap, but realistically, if we flip onto another one here, we can see this is a gap. So this is certainly where, market left a large sort of opening for it all. This week, we did actually close the gap from, this is interesting, this one in this chart doesn't show the gap, so let's use this. Going back and forth, I know, but where are we at? This is not It's not a great start to the video, but that's all right. This is just emphasizing the point. So this is the big gap that we did leave back November last year. So we're talking like literally over a year that this has not been touched. We did get very close, as you can see, sort of on that sort of rally up through middle of the year through April, but obviously failed, stuffed around a little bit, and then came back down. But the thing that I've sort of been referencing a little bit, and I am getting to a point with all this sort of stuff. It's not just a little bit of a recap of history that we all know, um, which I keep referencing are these points here. So this top here, or maybe including this little spike up here, and this top over here. Because as you can see, this was the top that gave us the turnaround from this whole eventual move going all the way up here. These were pullbacks, yes, they're pullbacks, but these were your tops. This is the top of the very move. This is the second high. So these ones are more significant than these ones because these are really, even though they did pull back significantly, they are pullbacks in the further move. This was obviously, as I just said, this is the actual high. This is the second effort. Both of these, I want to sort of look at the price action, analyze the price action around these because, as you can see, these were coming down, coming down, and then flared right up, and came down, boom, and then that was the move. So this is what I'm looking for as a repeat to see if we potentially could see even a bit of medium term pullback in US dollar and DXY. Because realistically, I mean, everybody and everything you look on, look, there's a lot of things pointing in one direction. And generally with the markets, when it looks so obvious, that's when they'll snap it back the other way. So it is a bit of a contrarian view at the moment because certainly, US dollar fanboys, man, they're in charge and they're hammering forward. You got a bunch of stuff. We got the whole sort of, Trump coming into office, trade wars again, sort of flaring up. We've got sort of really key sort of supports and resistances being hit right across the board. So the big question is, are these levels, these significant support and resistances, are they going to hold? Are they going to provide a medium-term relief, which is probably what I'm actually looking for? And then maybe the second revisit of them, that's when they'll break. Or are they just going to charge straight through? So that's really kind of where the market is at the moment, as far as I sort of see it. It's very easy to sort of trade things when they're super extended out because it's kind of like, well, it's gone so far out. Even if you're going to hold a little bit of drawdown, most likely you're going to see a bit of a correction through that period. Um, DXY, particularly at the moment, yes, very stretched out, but it's coming into these, as I said, into these very high time frame resistance areas, which are sort of covered through this week. These sort of three lines here, first one sort of being the gap, as I just showed a second ago, that's closed the gap, that's fine. These two highs here, if we sort of really zoom back here again, well, these are the significant highs, and I guess we could actually, let's pop another one just right up the top over here and say above 107.34. You get above that, okay, bang, it's away and it's given. So the question, as I keep sort of saying now, is this, particularly if you look at this, let's clear this up. I'm going to clear these charts, which is a bit of a sad thing for me at some point, but I'm not doing it right now. Maybe it's a hoarder mentality. But if we take this off here, this trajectory in anything is not sustainable. So the question is, are we coming up here, consolidating the highs before we just go bang and explode out for another leg up? Which is, I mean, look, if you look at the fundamentals, it's all a possibility. If they sort of really sort of clamp down with sort of China, the trade wars, and everybody really sort of buys into the whole, the tariffs are going to be inflationary, sort of, narrative bias, um, yields break out, the Fed sort of this week, obviously, sort of a little bit of a tangent here, but the Fed this week, Powell sort of came out with some comments, which the market, I'll point out, tangent off a tangent, the market didn't buy, apart from 2 seconds after he actually said it. Sort of Powell was saying that, oh, look, you know what, we're not in any hurry to sort of raise the rates, and bang, market kicked back into life. And let's actually sort of get down onto this level here. So this is the point just here. Coming down, and up a little bit. Sort of, it had a little gap over here, just intraday kind of thing. Came back up here. Powell, 7 a.m. comes out. Hey, you know what? We're not in any rush. Boom, market shoots back up. And what's the subsequent move afterwards? It just comes, dribbles back down. And this is the point. And as I am getting to a point with all this, if you look at the price action through here, we're coming down. We've got lower highs, lower low. So technically, you got these things. I mean, we had these ones last week, which I did cover, which I got snapped out. This was a very beautiful bear trap, which, yeah, got me. Okay, probably got a few people. But the point being is, if we look back at these previous highs, it doesn't drop in one thing, in one move. It comes down slower, okay, higher. Now we've got a lower high here. We've got a lower low. It doesn't, DXY, as it trades, doesn't do this move here till it's really sort of sucked out about 5 lots of this, because here we got lower low, another lower high, another lower high, a lower low. I mean, this is the textbook, okay, now we're sort of rolling over a little bit, and what does it do? Jams right up to the very big top over here, and then it sort of starts to come down. And I remember trading this period at the time and thinking, like, this is just ridiculous. It's like one bit of news or one headline, and bang, the market's up to it. And then they sell into it again. One bit of news, bang, flies up, market sells into it again. And this is why I get a little, like, yeah, it can be a little bit tinfoil hatty, but the same sort of thing here. It's coming down. You've got lower lows, lower highs, lower lows, lower highs. Then all of a sudden, let's go right back up to the very top. What does the market do? They sell into it. So it brings us to sort of where we are now, albeit on a smaller sort of scale. It's coming down, like coming down, back up to the top, coming back down. And this is the thing, if we sort of jump on the 1 hour again, lower highs, lower lows. This obviously had bounced a little bit prior to it all, but pow, boom. No, we're not in any rush to cut rates. Market goes, okay, well that means, more likely going to be sort of holding. Well, holding's going to be sort of more sort of like bullish for the US dollar. And what did they do? They sold into it. Time again, coming down here. Retail data came out, was stronger, actually a little bit, I think quite significantly stronger, and I think also unemployment claims as well. Maybe the unemployment claims, I'll get to that. Anyway, data, US dollar strength, boom, fires back up. What does market do? They sell into it. I always sort of say, each time I do these particular weekend videos and that, don't worry so much about the last 4 hours, or the last 8 hours really. So you could say that, look, this is definitely still holding up in this area. Let's get some drawings back on that. So we are sort of seeing that obviously this is the line to beat. And this is what we said, or I said, coming into Friday session, that this was what we were looking for. Break underneath here, which obviously broke down, tried to hold it, and dribble, came down into this zone here. We expected to see some buying come from this area, whether it happens to be organic or whether it happens to be data driven, whatever. Because it really, I mean, I know this is a bit tinfoil hattish, but I question some of the numbers that come out of the Fed at times because it's sometimes a little bit just almost too perfect in that for it all. But anyway, regardless of it all, coming back down here, this is the area that we expected to see some buying. Yes, we touched underneath it and that, but more or less it didn't close outside this area. As you can see, this is on a 1 hour. Retail data came out and bang, back into life and boom, shoots back up over the top over here. So look, as it is at the moment, this is still what you can say, consolidating this area through here. You can't be calling it a top, and to be fairness, you can't even call it a continuation at this stage because it's not doing either. It's, as you can see, it's just sideways. So you got to sort of think, as I said, with all these other markets coming into their support and resistance areas, as a broad sense, are they going to hold that? And are they going to act as supports and resistance should do? And are they going to move back up? Because supports and resistance are just areas in which basically you've seen the market value whatever whatever index or whatever instrument you're sorry, I can think of the word there. Any instrument that you're sort of trading, it's just previous action of where the market for whatever reason has priced it at a certain level, whether they be selling it, whether they be buying it, and this is why support and resistance are generally the same thing because you're getting people swapping sides at those sort of levels. So are these areas going to hold? Which, generally they will, because that's the whole point. It's a support. The market comes into it. Market's bought it there before. Hey, here, look, I've got another chance to buy it at this level. Let's buy it again. If the selling overcomes that, if for whatever reason the other portions of the market are looking to, get out of that asset or whatever, that can then obviously overrun that level, and that's how your support breaks. But you are going to see, and this is why we sort of say with these things, this is where we expect a reaction. This is a perfect example. This is where the market had bought it. You can see that they consolidated a little bit through here. This whole red area, if I can't be bothered going back again, but obviously this red zone is in here, sort of identified previously as an area. So we know that the market is going to do something here, and this is my example. This is the support. So you know that the market's going to hold this, and goes on every time frame. This is on a 1 hour, of course, but we've seen the market sell it from this area here. So we know that, DXY is coming into its resistance. These other markets are coming into their supports. Are we going to see these levels hold? That's the big question at the moment. And it's a pretty clear defined kind of level, I would say, because if we break out those highs, I mean, if you look at it on a higher time frame, it's still very bullish. I mean, look at this. Very bullish. But we can see that the market has definitely liked to sell it from this area previously. Tapped into it and sold it down a little bit lower, but this is why we had that other red area identified just before. So the question is, it's overbought, it's just kissing to turn over here a little bit. It was a very bullish and a bullish close for the week in terms of the actual sort of whole week. Is this going to be a top? Are we going to see a little bit of a flare up and a move back down, or is this just going to continue through? So get back onto the time frame we can actually sort of use. So ones and the fours and that for the moment is the best way to sort of identify these things. Above these levels over here, you got the high of all those wicks was 107.34. Above that, away she goes, and you're really looking at some damage. Below here, I would say take out the wicks. Like, even though this was a very bullish week, as I saw a second ago, and just drove all the way up through here or wherever it started from the week, I don't think you need to necessarily undo the whole week because we're not calling it very necessarily a whole sort of very top. But to me, as you can see, it was quite significant that it was coming. This is quite an easy sort of see. We're clearly moving up here. We're clearly moving across here. So if you take out those wicks from Friday night, I think there's a good chance we see this move here. As to sort of how deep this comes, well, we've got to sort of then sort of get stuck into that once that happens and work out where can we see the idea that maybe the buyers will step back in. And this goes again back to what I was saying with the support and the resistance areas. We look at where the market valued it here, so maybe the market value here. Maybe we get down here, and these are kind of like, obviously a bit of a resistance area down through here, so maybe the market will value it back down over here. you got to sort of like, put a bunch of things together. We'll get our fibs out and we'll work out some fib levels, this kind of stuff for it all. However, let's clear this up again a little bit. But you can certainly see at the moment, the market is, for lack of anything else, it's hit its resistance area. It's tried a couple of times. We've seen that this is the kind of price action DXY likes to do as it does turn around. So to me, I do think that we could be seeing a little bit of a pullback here. I think it just looks like too much of an obvious trade to just keep on charging all the way through. Look, I could come back to you next week and it'll be trading at 108, 108.50. Like everything's a possibility. That's the whole point of this market. But given a couple of things that, previous turnarounds, given the fact that it is stalling, it has got the sort of signals that we've seen previously for DXY to turn around. The fact that even with these bits of Powell sort of saying, hey, look, we're not cutting rates yet, stronger retail sales, they both got sold into immediately after. That's more distribution to me. It's kind of like, oh, look at this, hey, strong retail data. We're not jamming it up here. We're going, oh, great, it's another chance to take profit a little bit higher. Let's do it. Boom, sold back down. So I think, look, underneath the Friday's lows, so let's say underneath 106.25 or 28, whatever, that kind of area, I'm going to say cooling off DXY higher time frame, even though this is technically on the 1 hour time frame at the moment. I think if we can get back down below that level, I think that's when we could see a little bit of a pullback down here. And this, again, it goes for the fact that supports are meant to hold. They're not meant to hold necessarily forever, but they do offer some level of support. That's what they are by definition and shit. So, there is a good chance that the market will try to sort of take profit on their short dollar positions, long dollar positions, short whatever else they're trading, and you could see a little bit of that flow come back out. It doesn't guarantee that you're coming down here. All it does guarantee is that potentially you could be coming to here. It could be further, whatever. But again, we are still going to see one more move up, whether it comes from down here or whether it comes from over here. That's the thing. It's sort of like it won't roll over and just necessarily die. It could, but given everything with the fundamentals at the moment, there's a good case for the US dollar still to be bought up a little bit, albeit from maybe a lower level. Just to go through straight away, it just seems a little bit too obvious with it all. So that's how I'll sort of be playing this week, or at least the early part of the week in that, to sort of see that we could possibly see a little bit of a little bit of cooling. The fact that it just got sold into on these last little parts here makes me think that whoever is still just using these headlines or bits of data to get out might be enough to sort of go, okay, well, if we got a chance to get out, and let's see if it moves down. I did notice this actually just before I was just having a quick look around. If you drag this up through here, was it this one? Yeah, possibly somewhere here. Oops. Yeah, I'll redraw that one. That's fine. We put this on the 4 hour through here. Drag this from the election lows up through here. It does give you a pretty good little support line as well. So let's just make this a bit thicker. Let's make him blue. Boom. So you can see that sort of like from the election, old fibs getting off there. From the election down here, through the middle here, which we've already got marked out, and then didn't really sort of quite get to it here, close, but certainly this last little bounce around retail sales, that sort of worked it out as well. So again, this is just another thing that I'm sort of looking at, that if you're potentially sort of trading the continuation flow of this move through here, if you break this little consolidation sideways, this little horizontal, you're also breaking this little medium term rising support. Again, it doesn't mean that you're coming down over to here 101s and that, but it does give you an idea that people will go, okay, it's lost momentum a little bit. Maybe we could sort of see a little bit of cooling on that. We drag it up through there. It's a little bit of a channel, actually, if we look at this. which we did actually almost pretty much have marked out with this little line coming through here. So to me, it's pretty much looks like a nice little channel. Um, so if we do see a break of this area through here, I would say that that's the direction that I'm happy to sort of say that we might see a little bit of a cooling. So let's pull this here and we do orange for the direction. That's what I'm looking for there. From that, flip side, of course, both sides of the coin. If you go above this level over here, that's where you're moving up towards. You do have a couple of the wick highs, remember, so they are going to offer some sort of resistance, but most likely you'll see a continuation. This to me looks like a pretty good little channel moving up through here. So again, you need to get the confirmation. The confirmation will be taking out Friday's lows, taking out the horizontal, taking out the rising support, move back down. It could just come down fairly shallow and then sort of be brought back up. We'll sort of have to wait and see. But to me, it just seems a little bit too obvious of a trade to just continue powering through. So we'll see how we go with it all. But underneath that level down there is where I'm looking for. You go above Friday's highs. Sorry, that wasn't Friday's highs, was it? It was Friday's highs, yeah. So above Friday's highs, below Friday's highs. They're the two levels for the direction. All right, flip across, we got gold. So gold, we saw a little bit of a bounce off that area. So we did say, look, I mean, apart from the fact that if we break this box, this shows how far off the mark I was. I was like, look, if we break this box here, well, we'll come down here. Maybe we come down to these lows over here. Absolutely charged through. I am quite dirty. I will admit that I missed a lot of this short side move. It has just been such a beautiful short from up here. And realistically, this is what we were talking about with the 3 drive at the top. The 1, 2, and I just thought, look, maybe this will just get up the top. The goal was to short from around this area. And for some reason, I was out and about and took my eye off the prize and I sort of longed here. And then I sort of like got down here and I'm like, oh, maybe this is the lows. And I've been trying to catch it. And just been slammed with it all. Caught a nice little move through this area through here, but the short side move definitely missed this one down here. So anyway, enough of that. Enough of feeling sorry for the fact that we missed that move. Let's update this one, see how big this actual move is. 9%. That is mammoth. And 9% is a big move. I mean, I think I was watching someone before saying it's gone 30% over the year. Well, it's undone 9%, so a third of that almost in 9% this way. It's not 10% of the other way. I understand that, but we are seeing a very big drop off. $250 move in like 2 weeks, 3 weeks, 2.5 weeks. That is just monster. And again, these are my sort of thoughts that, things, they're sometimes easier to trade when they're super oversold. But, I did think that around these points. And yes, it was right for a second here before we got slammed down again. So, question with this at the moment is, are we going to see this hold? It came off the lows. I can't remember what day it was. One of the areas through here, I said, look, if we take out the 80s, 50, 60 is where we were looking for. And we actually overshot it a little bit, down to 37. So very close to that retest of this big consolidation. Underneath that, 2480, I think, is an area because this was quite a strong resistance as well. Remember, this is the larger range, and then we broke out and consolidated at the top of that range, and then we took off. So these are a couple of areas where, look, if we break down lower, these are the kind of areas that I'm looking for things. Like I've heard calls of people saying, hey, look, 2400 and all this kind of thing. Look, to me, if you go underneath here, if you're underneath 2480, I don't see why 2350 isn't really necessarily a level. There are some smaller levels through here, but these were more, to me, are much more significant. This little range here. This was the range that we traded through that period, and this was the whole point. I remember doing this one because I was using this saying, like explaining buys, and you can see buyers lifted the bid, and they were moving up, and that's what gave the breakout. So, yeah, look, I think if we go underneath here, I think sort of 25.30 or 25.20, whatever, around that in change, will offer a little bit. And also, if we get underneath that, 24.80 is the absolute line in the sand. I think underneath 24.80, I think you're looking for another big move down. And we're talking monster moves. That's 15%. I will reference something actually in a moment if I remember, because I've said that a couple of times and I forget to get back to it. But 15%, right? Actually, look, we'll do it while we're sort of looking at right now. Let's go into the daily. I was looking at this a while ago, sort of looking at other massive sell downs that we had with gold. Jeez, if I've got it marked out, I'll do it. Otherwise, stuff it. Through these areas. No, this is it. This, I think this is it here. If it's not, well, whatever. No, that's 9%. No, this is it here. Okay, I've given up. Anyway, long story short is we've seen massive sell downs, and these have obviously come quite sharp previously. This is 6%. I'm sure there was one that I had sort of marked out. It was 15% down. Last one. This is where the video kind of falls apart. Ah, here we go. This is it. 15%. Boom. On the money. So, this is obviously history lesson going back. This is in March 2020, which we all know why these sort of things move down. This is a 15% sell down. And you can see the recovery and subsequent moves afterwards. And then we long sort of consolidation period of sort of selling down. And then if we have a look at these other ones that I just isolated just then, sharp moves down, 8%, sharp move down. Look at this as a straight, this is in the daily. This is just straight down. This is 124 bucks. This is 156 bucks. Admittedly, the buck percentage, this is $252 that it came down. But look at the resulting moves afterwards of all these really sharp, fast sell downs. Move up afterwards. I mean, you can sort of obviously drag it to wherever you want, but there's a 42% gain after that move. After this one, 15% gain. And look, I won't even bother referencing this one because obviously you can see that that's the move and it's just been flying up. So look, 15. The point with this is that if you look at this move here, albeit sort of like obviously from a lower height, $252, that's 14% down there. So to sort of say that, look, gold couldn't ever come back to here, well, that's 15% right there, albeit, yeah, $436 move. It is possible that this could be coming back down there. Anything's possible with it all. It's not like we haven't seen and this is my point, we haven't seen a 15% drop off in gold previously, albeit that was it during the sort of the COVID period or whatever. But yeah, that's it has happened before. But if these things do push up and if they do continue and they catch a bid, things can move very fast. Excuse me, and generally the resulting move afterwards is quite a big one. So I'm not completely writing off gold yet. As you can see, selling down, selling down. It did try to sort of hold and consolidate these lows down the bottom over here, sort of coming into the end of the week. It bounced off its little low. Very, very, very slightly are you seeing a bit of a negative divergence through this area as well. Negative divergence through here. As you can see, each one of these sell downs through here. Oh, wait, it's pinpoint, isn't it? Coming in a little bit higher. I should put them on the side of it all. And these line up with this low and this low down here. So only ever so slightly, but certainly that is your textbook sort of negative divergence through here. Doesn't mean it's going to hold. Doesn't mean we're going to see a push back up to sort of 3,000. It just means that this is something that you score, like at the end of the day, with the technical analysis, you need to score it on the sort of like, you know, the possibility, the likelihood of a certain move playing out. And this is sort of something that you tend to see, negative divergences like this, in a reversal pattern. So if this was to be a bit of a reversal, if it was to sort of shoot up and recover a little bit, you got to say, okay, where are they going to get it to? Because as I said, I'm not saying it's coming to 3,000, but even if you want to sell this down, you let it sort of shoot up a little bit, and then you sell it down from here again. We've covered this a couple of times, and that particularly sort of like around that period when US dollar was selling down just recently before the 50 base point cut. It was sideways and sell up, boom, sell it down, up, boom, sell it down. These kind of things. Same with the Aussie. You know, what are we saying? It's coming down. Why you want to sell it from here? If you're going to sell it down further, why sell it from here? Why not sort of get up here, grab some more liquidity, get some people to get long, put their stops underneath, suck them in, sell them to it higher up here, and then short it down from up here. And this is my point that I sort of mean that it doesn't mean that these things are massively going to have miraculous reversals. I've just shown examples that show that, look, gold could have reversals from here. It's if you look at its previous price action around these large, sharp sell downs, yes, they can come back and they can come back very strong. But given the current landscape with the things that are happening in the fundamentals side of stuff, there is a likelihood, at least in the short term, that we see a break of that level on DXY before we see a move back up like this. And maybe that's what if this comes down and then back up, what have they done? They've sort of sucked in some shorts, added some liquidity to the top side of these moves, and and vice versa on your euros and your pounds and all that kind of stuff. What's not to sort of say, given the sort of technical setup with this DXY, where it could easily break down here and see a lot of people get dragged into this because of the technical breaks and all this yada yada, to then not sort of see subsequent flows come out of this market, come into gold before it moves up to, maybe this little resistance just here, as high as it gets, maybe it gets to 26 and they sell down. Maybe they drive it up even further and we come up into this falling resistance from up here. And then we sort of say, oh, once it's done that, then they sell it down from here. Sorry, computer was slowing down. I thought the fans had stopped again. This is a likelihood that you could see things happening. Look, normal correlations have been whacked off for a couple of weeks. I've made note of this. I've sort of tried to title these things, and I've noticed that your typical correlations have been really stuffed the last month and a bit, which has really sort of thrown things out and makes it a lot harder to get a proper read on what's happening because you can't pinpoint exactly where the flows are happening with the market. But end of the day, the correlations will go different and they'll go out of whack, but they do generally revert back to what the mainstream, the norm is. I use the rule of sort of 90% generally with gold and DXY. 90% of the time they run inverse, bang, beautiful. 10% of the time they'll run together. You can't pick what the hell's happening with it all. We saw this most recently while they were both running up. And then I said, one of these is going to crack. I thought the DXY was going to crack, but I got that wrong. And gold was the one that cracked. And gold came down. DXY continued going up. But it means that through this period, they've actually reverted back into their normal price action. DXY up, gold down. If gold can sort of push up, or if DXY can push down, that could see the flows move into the other market. Take profit out of here, put it into here, into your little resistance area, into your next support area, back out of this market, and into this market. And that's how we see the flows move back and forth between all markets, but in this case, between these two. So flip back onto gold. So look, I think that potentially there's a lot of work and there's a lot of sort of negative bias on gold and metals and all this kind of stuff at the moment. But a lot of what was pushing gold wasn't the Middle East conflict. And I said that, and I was quite vocal about that the whole time because I was feeling like you're seeing things go really bad and you weren't seeing gold spike. It was kind of just moving more along with sort of DXY other than actually sort of moving with the strength there. So look, in short, I think at the moment we could potentially see a little bit of a bounce. It does look like it's tried to sort of wedge this point here, a little bit of an overshoot up here, which, like, again, if you look at these things, you flip it, sometimes it's easier to see the other way. Here's your moving up. This is what's called an overthrow. It's much easier to see in this direction here. Overthrow, comes down, rolls over here, boom. So this is where, in this case, your sellers are, but obviously because the chart's inverted upside down, they look like buyers. But that's your line. That's where you want to beat. Let's go back onto the null. So if you get back above, say, 25.75, I would say we're probably going to be moving up. You're going to be looking at potentially seeing a little bit of resistance coming from this little channel. Because again, look, at the moment, this is what you would be seeing as a channel because it lines up very well with this little move down here. So, up above here, you're running into the underside of this little support over here. Obviously, if we go back, that was an area that the market liked to previous sell at as well. So I think this is your first target to get through this little area here. I think if you can get through here, we're really looking for this falling resistance here. Something like that. That's the move that I'm sort of looking for with gold. So it doesn't mean that we're going back up over here. I mean, you break this falling resistance. Well, we know how this works. If this moves back here and the sell down goes like that, and then buyers move up their bid, that's how you'll see a breakout to come through there. But we'll deal with that when we get to that. First things first, actually get off the lows. Second thing, get through this little first area here, which is this little channel. Get through that. We've got this next falling resistance, which lines up as well. I mean, obviously it depends when you hit it, but there's lots of there was quite a lot of sort of congestion around here. So there's a lot of little areas which we could drag across and say, okay, yep, that's a confluence and it lines up with that kind of move there. But I would say that's potentially what we could be looking at here. So a little bit of a continuation with the metals. Up to say mid 26s, then sort of play it by ear. Expect to see once this hits, if this does come down and hits this level, let's get onto this. If we, if we say this is spin point here, if we see this connect here, connect here, connect here, if this plays out and you get a push and you go through this area and you get out of the channel and people go, wow, look, he's moved up here. Maybe this turns into a little bit of an inverted head and shoulders, whatever. When it gets to this line, no matter where it is, down here, down here, down here, up here, expect a reaction. Expect people to sell it down. So if you're long and you get the breakout through here, you're not buying the bottom to take it to the top. You're taking some profit as you hit this line, because there's a very high likelihood that then this comes in and this just goes like that. There's very much a possibility that this sell down will continue. But it doesn't mean that we're selling down like this come Monday morning, necessarily. This is the fun thing. You can really sort of doing these videos, you can really open yourself up to looking like a complete idiot. But the whole point of these things is to put yourself out there, put your ideas out there, and look, if it's plausible, great. Wait for the confirmations and then sort of trade them. So above 75 or 79 in this case, small relief rally. We got a negative divergence. We got DXY sitting on a potential break, like short-term breakdown. I think that could see a little bit of profiteering from that and a little bit of move into these markets to push it up. Okay, enough of that one. Let's have a look. Silver. So silver actually leading the way a little bit. Copper actually led the way more, but we did see a little bit of a negative divergence coming through this area here, and we can see the reaction that we saw from it. So these are coming down with lows here. These are coming highs here. So this is your low, that's your low, this is your low, this is your low, which is a bit higher low. Bang, reaction comes through, stuffed around, came through Friday, broke out, and then if it hadn't been for those retail figures, you probably would have seen a continuation. But, you got to trade off what's presented, and there were strong US dollar figures, strong consumer spending, so market broke out. Where it is here is into a wedge. We've broken the wedge. We're retesting the top side of the wedge. If we could see gold and, as I said, that last little action happen, we could see a breakout and move up over here. You then need to get above 31. It's actually 31.18 or so. I did reference it the other day in one of the posts or videos I did. This is the area you want to get above. Yeah, there's resistance here. Yeah, there's resistance here. We're not saying it's going to 38 at this stage. What we're saying is that we could potentially be seeing a little bit of a sell down being halted. So where it's held through here is also, as you can see, a previous level that they bought it down here, let it go through, broke right through. You want to see this level hold. You want to see the market gave it a shot here, and this is my point. This is what support is. If support goes, okay, yep, let's give it a shot from here. Pushes up here, people think, yeah, that's great. Boom, chance for me to sell it down more. Smash it down. Next level, Hey, let's buy from here. They bought it up. Boom, let's sell it down. Bang. Are these people going to step in the same as they did over here? Or are they sort of, nah, look, we've already gone down. We've already allowed it to go under. And that's the level that you go back to there. So they're your two levels that you really want to see market reaction from to get a movement up like this. So I think sort of realistically, nothing's sort of rosy till you're up above this level here. So above, yeah, 31.18, and that we might see a little bit of people go, oh, hold on, wait, we've got something going on here. You can take out Friday's highs, which were the wick highs here at 30.80. But again, you're running into resistance again pretty much straight away. And this is obviously the previous support area as well. So if you drag that, you can see this is that sort of idea that support and resistance are the same thing. So this is why I'm looking at this figure here a little bit more than I am looking at, say, this figure over here. You probably will see some markets sell down through this area, but this is a bit more of just back and forth, back and forth. This to me is a little bit of an area where market was supporting it, market were resisting it. Generally, you won't break it through the first time. We got close, didn't quite get there. But if you can push back up here above 318, that's when I'm going to say, okay, look, I think we might be getting a little bit of a move. Get back up around here. Well, as I said, I put a post the other day. I'm just waiting for them to start sort of putting silver squeeze on the on X on the trending. I think that'll be an interesting sort of time with it all. But of course, that's getting ahead of ourselves a little bit. So with silver in the short term, I think look, see how it opens up. At the moment, we are in a wedge that's broken out and we're retesting. This is what you expect to see with a wedge breakout. Things don't break out and run like this. They just don't do it. They always backtest. Generally with wedge breaks and that, they'll actually backtest lower than the breakout level. My feeling for this is that sort of people buy the break, wow, I'm onto it, stops to even, boom, I'm out. I'm stuffed. Either, mentally I'm just pissed off because I traded, I got the breakout, now I'm stopped out, I give up, I go look at something else, and then you'll see the move. It could still come down further into this little area down here, 29.90s, and then sort of move back up. But there was a couple of areas of support that we saw through here. Previous resistance was support, first touch into it, things don't go through the first time, reacted, push back out. So, that was an expected move out of here. And this is my point, that supports are there to hold. They're not guaranteed to hold or guaranteed to hold forever. Obviously, otherwise things would just be not moving at all, really. But, excuse me, the thing is they don't generally break first time unless it's a massive bit of news, in which I call those ones basically a change of the landscape, and you need to trade that new landscape. But is it just general technical moves, which this is technical flows coming through here? There wasn't any FOMC, there wasn't any sort of major bits of data or anything that really got this to go bang down here, hit that level, people took profit, people got long, market reacted. If it comes down here, these people may not be as happy to buy it again. Maybe they are. That's what will give you a double bottom and you push back up. If they go, look, you know what, we gave it a shot here, and its selling comes down here and breaks through, well, support hasn't held, going down further, and we won't just see it generally on silver or one market. We'll see it on all these markets, and this is the point, that because they're all coming into their support and their resistance at the moment, I think there's a higher likelihood that people are going to be taking profits, people are going to be giving it another shot in the other direction. So you need to honor that move, which will give us a little move up here. That could then see this move come like this, like anything's possible, or it could come up like this. But I think this is something that is a legitimate move that could be coming, given the three markets that I've shown just now. And same sort of thing. I don't cover Euro, but if you have a look at Euro, down into its big support areas, it's tried to come through, it's broken out of its channel, it's backtested the top side of the channel. Last couple of hours, you don't worry about it so much, but look at these little spikes coming up here. They're trying to hold it. This is the area that we wanted to see it beat. It obviously got rejected from here, comes back down. That's your level above there. You won't just see it generally on one market. You'll see it on a bunch of them. Negative diverges down the bottom here, trying to hold the top side of this retest. It's into a support area. If this recovers, there's a move like this, possibly up to these highs. Could come up there and could come down like this. It could come up like this and then come down like this. But I think this move here, first of all, is something that needs to be tested for the market. As to whether it gets past this level and keeps on going, doesn't matter. This move still needs to come. So you're not necessarily buying the be-all, end-all bottom of it all. But it means that this move potentially here is coming. If we get these, just keep in mind that this move is also coming. This is the legs. This is how the market will work. It'll go down, find support. It'll come up, find resistance. It'll come down. And you've got to test how strong this sell down is. Double bottom, lower low, higher low. That's what we want to see. But structurally, if we do get a push up through here, keep in mind this move is also coming. Anyway, that's Euro. We don't cover Euro here. We cover Aussie next. Anyway, back. I think we finished silver there. So that's, again, I'm looking for a little bit of a reprieve. Aussie. It's a bit hard to sort of say anything nice about Aussie. It's really been hammered. One thing you are seeing is it is holding, it is developing a bit of a support area through here. The sort of zone through here. It's come down, it's bounced back up, it's come down, it's bounced back up. We had it actually didn't look too bad for a second. Actually got a nice little push up through here. And then we had the retail sales, boom, and smacked it back down. Disregard the last candle of the week, that's pretty much going to be my stock standard approach and move forward now, because as I cover each week and I say each week on each of these things, there's nobody at their desks. It's really just a couple of sort of, probably low paid interns. So you look at the last little actions there, and look, it's nothing sort of super bullish. It did try to move up over here. Then you had the retail sales out, and boom, it put in almost a brand new low. But obviously bought straight back up. I say straight back up at that 20 points. Bought up. So the buyers are sitting here. The buyers are happy to, you give us a shot to buy it. Yeah. Excuse me. Give us a shot to buy it. Great. Give us a shot to buy it. Great. We'll take it out. We'll take it. We'll take it. So you got to sort of think, are they at the point now, are they going to hold this area? And this is what I mean. Things are coming into their supports. They're coming into their resistances. If you look at this strictly through this period here, and then you use the RSI as well, it's not directly a negative divergence, but we are seeing buying pressure, despite price more or less going sideways. Whoops, where's the thing gone? More or less going sideways. That's not the one we want. Come on. Yeah, let's try that again. Going sideways. Even pushing down a little bit. You can see, obviously, we didn't make a full lower low here. But from these lows over here, prices just hit sideways. Buying pressure is moving up. And this is what I say with these things. You don't technically need like a full, it doesn't need to be that to be a full negative divergence. I mean, yes, technically in the name, negative divergence, yes. But you could say that this is your low here then, and that's your low there. Buying pressure is pushing up. This to me says that there's a chance that we see this continue and flip up and move up over here. Look, a lot of work needs to be done with Aussie. You need China to really step into gear. I saw a couple of headlines before, weekend headlines saying Xi is, he's happy to work with. Give me 1 sec. I'll see if I can find him. Yeah, see these kind of things here. Xi, I'm ready to work with the new Trump administration. There's a bit of China. I follow a little bit of sort of China data and that kind of stuff. Obviously here, look, it got weaker. Okay, blah, blah, blah. I haven't really looked into this, so there's no point in me referencing it. But the point is, stimulus takes effect. Anyway, whatever. The point I'm referencing is these kind of things here, where we're sort of saying that, because the big thing that's weighing on Aussie at the moment, apart from just, yes, US dollar strength, that's one thing. The big worry with Aussie is that there's going to be a China trade war, and China's going to get smashed. And that's going to affect available money they have to then spend on Aussie products. And of course, if you're buying Aussie products, you're settling in Aussie, the demand for the Aussie, if that goes down, Aussie dollar goes down. That's how it works. Um, but there's other factors involved with all this sort of stuff as well. So, you know what I mean? So, yeah, sorry about that. What was I saying? Yeah, so look, with China, you want to sort of see that um, the sort of whole Trump and trade war thing doesn't really decimate China. Um, we've seen, I'll cover sort of one in a moment, but a potential sort of combat of that is that they have a sort of weaker currency. And this again is another thing. A weaker currency is like weaker yuan, then flows on and affects other things. It'll affect copper, it'll affect Aussie as well. So really a lot of Aussie's strength at the moment is predicated on China actually doing something halfway decent and being able to smooth over the stuff with Trump and the new administration coming in, and basically just not destroying their currency. Because if it goes super weak, then yeah, look, it's going to affect Aussie, and it's going to get probably pretty dark down here, and we're going to be looking at those previous wick lows. Where was it? Down over here back in August. Um, so look, there's a couple of levels down underneath here, but I think really important to be sort of looking at sort of what's happening with China. All right, so that's an idea of sort of what we're looking for to get Aussie actually back up and moving. Let's make this a zone. In terms of sort of what it could be doing sort of come this new week, this is zone as well. This is kind of the area that I'm looking at. Actually, really probably I'd put it above here, above 65. That's where you need to see it move up and hold. Not just a little spike above and then go back down, but you want to see it actually get up above there. So like I've shown with a couple of these other things, and if it does work in one, most likely the given general sort of correlations of things, you're probably seeing it happen in a couple of these things. Because I'll cover copper again in a sec. Well, no, I will cover copper as well in a second. But we saw that gave it a pretty good little push come Friday as well before getting slapped on the nose. So these things are finding some buyers down here. It's just a matter of sort of how determined are they to sort of continue with that kind of move. So if we do see gold push up, if we do see US dollar sell off, if we do see silver try to recover, if we see copper try to have an actual base put in, you will see Aussie continue as well. And then we sort of think, okay, where is it going to potentially move to? Well, there's any number of resistance areas that it's going to have to deal with. I wouldn't even consider the stuff up around here necessarily at this stage. This is a bit choppy through here, so we'll have to work about that. But to me, 80 has seemed like it really, if we get rid of this one just here, this is kind of just consolidating the lows. So pretty much inverse, obviously, of what we're seeing with DXY. Moving down, consolidating. Are we going to see it move up or are we going to see it move down? That's the question from now. So above 80 is where we've sort of seen it poked its head up, smashed back down. Poked its head up prior to the retail data, knee-jerk reaction, bang, smacked it back down. This little move here came from, as it was putting in a nice little, had a little wedge here, had a wedge break, moved up, and then Powell opened his mouth. Boom, smashed down. Recovered again, retail sales, bang, smashed down. So look, if it can sort of, despite Powell's comments about in no rush to cut rates, despite stronger US data with consumer spending, if it can overcome both of those things to then actually push up and get above those 80s, then we could be seeing a little bit more of a short-term recovery on Aussie. And really 65 is the big number because we saw this little consolidate down here, broke down here, retested, and hasn't been able to get back up above that round number and all, yada, yada. So 65 is the number we want to see for a recovery. Early numbers above 80, I think is pretty good. If we do happen to get a close down underneath, say, underneath 64.50, I think we could potentially see this kind of action here, where we've just sort of gone dribble sideways, bang down, dribble sideways, and it'll just be another leg, and you'll be looking at something similar. I mean, this is a pretty ugly move for Aussie, but something back down to around 64. I think, and that's just a little rough cut of that. Like, I mean, you could make that a little bit shorter potentially. Anyway, whatever. That's the idea, that you potentially see a little bit of a flag and you see it down around 64 on a close under 64.50. So that's okay. You've got potentially a pretty good short. I mean, confirmation really comes underneath these wicks because we've seen it sort of move down here. That's why you wait for at least a 4-hour close, but taking out the wicks, also another sort of thing to confirm it. That's when you can sort of put some little shorts coming down here. And then sort of potentially, if you want to have longs, you have a look around 64 to see if it's going to recover up again a little bit. Excuse me. This could also just basically continue this, yeah, and then do something like this. So particularly if we see it move along sideways like this, look for where the highs come in. If these highs start dribbling like this, and the little efforts off this support get a little bit lower each time, like this, if we see this sort of lower high, lower high, lower high, lower high, that'll be like boom, 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 and it'll drop down through the bottom here. So look, I think sort of it's like most things, I think it's probably worth a little bit of a potential move up, even if you want to sell it down. If the people, the powers to be, yada yada, want to sell it, it's much better to sort of move it up like this and then sell it down like that. So it means that we do potentially have this move coming, but as we get this move, remember, this move is coming. Not necessarily to a new low, could be down like this, could be like this, whatever, but it will have a sell down effort, even on a break up through here. We need to have multiple confirmations that the buyers are sitting through here. We need to see them give it an effort, and then when that sell down does come, you want to see them move their bid up. If they hold the bid flat, or even worse, if they just refuse to sort of buy any more at this point, that's when you're going to see a bigger move to the downside there. But I do think that we could have a little bit of reprieve like those other markets just coming through there. All right, let's finish off. We've got copper, and this is what I was saying. Had a little breakout, had this nice little channel, broke out here, sort of moved up here. Is really leading the charge in terms of the metal moves or metal recoveries. It was sort of like poke its head up before you saw gold and silver move. They sort of followed on a little bit, not as much. But of course, bang, broke out, 38% right on the money, like to the cent, and then boof, smack back down. Disregard the last candle, you're still looking at a pretty bearish close to the week. You want to see it hold this zone through here. This is an area, obviously, we've identified previously where the market is like to buy from. Came off support. You want to sort of see if this goes. And this is the thing. If we can get a move back to sort of get a bit more of a recovery through here, it'll help Aussie. If we see this just continue and just this be a big move up, all it is a big move up, grab liquidity and sell down. And this is what I'm saying with these other markets. If you're going down over here and you're at this point, drive it up and then sell it down. It's much better to sell it from here than it is to continue selling it from here. So that's why there's always this possibility you see these little relief rallies that come through these areas. But always keep in mind this move, and this is a perfect example. You've got your recovery. This move is coming. This is always coming. This is how structure works. So although, yes, you've got the nice breakout up here, well, this move is coming. And this is where an interesting leg is. And this can, as I said, copper was kind of like the canary for the metals over the last couple of sessions. It was leading the charge. It was breaking out early. So look to see what happens with copper, because if you see what happens with copper and you see copper breaking out, that could be an early indicator of what's going to be happening with gold and silver. So we're in this leg at the moment. So the question is, are we going to get high, low, double bottom, lower, low? That's what we got to wait for on Monday to sort of see what the market does and see if this was just an overreaction of a sell down. But if we get a higher low, then the next point that we're looking at are the previous bounce highs. And that's when you're going to see, are we getting change of direction and potentially continuation to sort of move back up to these 430s, whatever. Probably looking around this level would be an interesting level, I would say. So I do think we could see a little bit of recovery. So on a positive move on copper, I'd be looking at 426. Previous supports over here, tried to hold it previously. Once it comes back into here, 50% retracement perfectly lines up with it. you're going to see a reaction from here. So if you want to short it and it does start moving up over here, that's the level to short it from, because you will get a reaction. And you get the reaction, and then you sort of go, okay, boom, if you want to, I'm not a big one of stops to even, but you put your stop to even, and you sort of go, roll the dice, have I caught the bounce high? Because there's a good chance that even from here, then we come back down over here as well. So I think there's probably a lower high coming with copper, but if I see copper try to rally and try to move up over here, I think that's going to be an early indicator for gold and silver. And Aussie as well in that fact. And we'll probably see DXY break down a little bit on that as well. And finally with China. China, actually, we did get the break on Friday night. Friday, yep. So came into the fixing, kissed it. We had this big sort of wedge off price target. That was the Trump, I keep saying Trump, but it was real, well, Trump election. It was the election measured move. Price target came in over here, rising support, bang, broke down. This candle where this broke through this, and this is why, you look for, is the market looking at these particular sort of setups? As this broke through here, that was the same time we got the breakout in copper. So the market is watching this, and a stronger one is going to give the push in copper. Doesn't mean that we're necessarily breaking out and sort of going to come right down, but as a structural thing, you've got your break. These are kind of like your little retests. So this could still flare up over here, but this makes me think that we've at least hit a medium-term high. We break these lows down over here. Break those lows down under, 721. You've got a pretty good, too many alerts. Let's delete some that we're not using. Whatever, let's get rid of this one. US 10 alert. Hold on. Yeah, that's a bit better. Okay, so underneath this little area, this little consolidation area here, we target these lows. You will see a reaction. As I keep saying, support, they're going to go, great, I've got another chance to buy it. Up here, retest on the side of these ones here, great, I've got another chance to sell it. You break the second time and come down through there. That's your sort of confirmation that we'll be moving down. As this does break down, if this plays out and we do get this little price structure and plays out and breaks out through this point down here, look at the metals. Look for copper to recover. Look for Aussie to recover. I mean, one's not a super fast mover generally. Generally, it does a lot more of this kind of price action, just sideways grind up and down, up and down, up and down. So this move won't come quickly, but if we do see this potentially play out and move out down towards these levels, we're going to see Aussie recover. We're going to see copper recover. And then you could see the market then try to buy things up a little bit higher. So again, it's just another thing that I'm using as a bit of an indicator. If we get these confirmations to say, okay, look, there's probably a little bit of bounces coming in the other assets as well. All right, that's about it. Well, it's a little bit longer, this one, over an hour. Well, okay, let's have a look just quickly through the data for the week. What do we have? So we've got BOJ Gov. The yen, something to keep an eye on. That's been sparking up a little bit, so we've seen a little bit of strength coming into the yen. Another thing that could be dragging a little bit out of DXY as well. If we see yen sort of continue to strengthen. So looking at UJ, that could also be a little bit of an indicator. Again, I don't cover UJ a great deal, but if you look at the strength coming through here into the end of the week, disregard the last candle, that's bearish. Or bearish close. Take it into context. Yes, it's moving up. Right on that last little support. If you see this break down through these levels, It's another thing that says that, look, you might see a little bit of energy come out of DXY, which will then sort of flow across to those other markets as well. Anyway, whatever. Back onto news. So what do we got? Yeah, G20 meetings. Not really sure how this will sort of impact things and that. Maybe we'll see some sort of more sort of resolutions to some of these sort of global geopolitical sort of issues and matters sort of going on. I don't. It's too early for Trump to be involved with this sort of stuff, but yeah, interesting to see where that happens. Um, Tuesday, policy minutes. I think this will be interesting for Aussie because, of course, we are still very hawkish. From the last time we saw Bullock, she still sounded very hawkish, despite everybody saying that, look, we think that she's going to be, well, RBA is going to be cutting. I've actually seen a lot of people sort of say, like, I think everyone's given up on this year. That's fine. I've been saying that the whole year, that there was no chance of us cutting, despite other people sort of being sort of quite patronizing towards these things at times. But, you know, at the end of the day, trade what it is. Point is that, look, we are still kind of hawkish. If you see this start to turn dovish, though, it's not going to be good for Aussie, but I don't see that happening at this point. People have been saying February. A majority of people seem to be almost pushing out to sort of mid next year. I've seen other predictions of late next year. This is going to help in Aussie in the sort of medium term. Remember, Aussie doesn't move purely on its own data and outlook, particularly against the US dollar, which is what I sort of obviously trade there. Um, If we see the US dollar come off, plus we are bullish, we've got a better chance of a further recovery. But if the US dollar still gets bought up, it doesn't mean that hawkish RBA is going to do anything. It's still going to get smacked about. It just means that potentially not as bad, but it just means that it really all is predicated on what happens with the US dollar, not only or not just what's happening with even if we are the more hawkish of the two central banks. Moving through, we've got a bit of CAD data, CPIs, how are they doing? Yeah, still, yeah, everybody's back into their bands, their 2 to 3% bands. A bit of China data, looking very flat at this stage. That's coming out on Wednesday. So pretty quiet sort of start to the week. Move through Thursday. We got this governor speaking again from BOJ. Bullock talking on Thursday. Unemployment claims come every week, looking to tick up a little bit, but still pretty flat. And then Friday looks to be PMI day. And we got the PMIs sort of coming through there. Of course, 145. Geez, that's what I hate about summer trading. 145 on a Saturday morning. That's your last bit of data coming out. But yeah, so pretty quiet sort of through most of the week. No major bits of data coming out. Little bits and pieces to put into the puzzle. But yeah, certainly yeah, nothing that's going to be rocking the market. So if we don't have anything that's going to be ultimately sort of shocking the market into one direction or the next, price action and price structure to me seems to be what will prevail. All right, that's it from me.